Good afternoon. I'm Attorney General Eric Schneiderman, and I'm here today with a group from great lawyers from my office, Executive Deputy Attorney General Carla Sanchez, Consumer Frauds Bureau Chief Jane Azia, Deputy Consumer Frauds Bureau Chief Laura Levine, Special Counsel Carolyn Fast, and Assistant Attorney General Melissa O'Neill, who are the team that have put together this extraordinary settlement and agreement. And I'm also very proud to be joined by Commissioner Julie Menon of the New York City Department of Consumer Affairs and Susan Shin, the Senior Staff Attorney at the New Economy Project. I try to stay away from hyperbole, but I can say with confidence that the settlement agreement we're announcing today provides an extraordinary set of reforms that will impact the financial lives and the financial security of hundreds of millions of families across the United States. The three major credit reporting agencies, Experian, Equifax, and TransUnion, maintain credit information on approximately 200 million consumers across the United States. The information maintained by these agencies and the credit scores that are calculated based on that information affect every aspect of the lives of 200 million Americans in significant ways in every aspect of their lives. Every day in every community in New York and across the country, someone is applying for a mortgage for their first home, trying to get a home equity line of credit to repair damage, trying to buy a car, trying to get a quote for insurance, trying to get a job. And a bad credit report can make every one of these basic steps in American life difficult or far too often impossible. So it's very important for landlords, banks, and other lenders to know the creditworthiness of their clients. This is a legitimate area for serious work. But the credit reporting system in America that we're addressing today suffers from inaccuracy and often from outright injustice. Many consumers have to deal with incorrect credit reports that have life-changing errors for reasons that are far beyond their control. A 2012 study conducted by the Federal Trade Commission suggests that at least 10 million consumers have errors on their credit reports through no fault of their own that affect the cost of borrowing. There are significantly more errors, but they estimated 10 million consumers with errors that actually would affect the cost of borrowing. And anyone who's been surprised to see a mistake on your credit report knows exactly what I'm talking about. Consumers find mistakes, they try to get it corrected, face a horrendous process, and the process often led to no relief. The other major issue that we're addressing today in this settlement is the issue of medical debt. At least a fifth of all consumers suffer a negative impact on their credit reports as a result of medical debt, which often result from services that are involuntary, unplanned, unpredictable, and for many, a dispute with an insurance company, which can go on for a very long time, can result in medical debt being reported to the credit agencies. These are large debts, and consumers are very often victimized by debts that really shouldn't be evaluated the same way to affect their creditworthiness. So these are just some of the problems that people have been experiencing trying to manage their credit reports. And in recent years, my office and many offices have received many complaints about the credit reporting agencies and the trouble that consumers were having getting things corrected. So we began an investigation. What we found, as I've just described, was very troubling. And frankly, the need for reform, was overwhelmingly clear. State and federal law currently require that credit reporting agencies conduct, quote, reasonable reinvestigation if a consumer disputes a claim on their credit report. We found that the reporting agencies were often resolving disputes from consumers by relying solely on the credit data furnishers rather than independent investigations. Now, this is the critical thing to understand, and this is really at the heart of a lot of our reforms if you look through this agreement. The credit information on a credit report comes from over 30,000 data furnishers. These are the creditors, the agencies that made the car loan or made the home loan. But we found that when consumer disputes came along, often the credit reporting agencies were really not doing an independent investigation at all. They were simply passing along the information to the data furnisher who produced the bad data to begin with. And if the data furnisher said it's okay, then they said, too bad, consumer, it's you're mistaken. This was okay. It was very, very hard to track, and very little was done to track data furnishers' performance, making it impossible to weed out bad actors. There could be a fly-by-night loan company that has issues on a lot of people's consumer reports, but they weren't being weeded out. They weren't being tracked. So fortunately, our colleagues in the Consumer Financial Protection Bureau in Washington recognized this issue and a few months ago began requiring the reporting agencies to submit regular accuracy reports to the Bureau that will include data on the furnishers that generate the most disputes. This is an important step, and the CFPB in the last few years has been taking steps in this area, and we are building on their good work with the agreement we're announcing today. Under the settlement agreement, the reporting agencies are going to work together to develop metrics and report to our office on all of these developments. And our agreement requires the reporting agencies to not only monitor furnishers' performance. Again, these are the creditors. These are the people who are providing the information to the reporting agencies about whether or not you have a bad debt. This requires them to monitor the furnisher's performance, but it also requires them to take corrective action against furnishers who have repeated problems. These simple tracking measures and these corrective actions will have a huge effect on the number of bad reports, inaccurate reports for consumers all over America, and it's going to enable the reporting agencies and the CFPB, which supervises them, to identify trouble spots and improve data accuracy. So, for example, if a consumer finds an item on a credit report indicating they were late in a mortgage payment, sends in documentation showing they were not late in a mortgage payment, prior to the changes we're announcing today, the credit reporting agency would usually turn to the mortgage lender and say, is this correct? The lender could, if the lender replied, no, the consumer is wrong, they were late on a mortgage payment, that was the end of the investigation. So they went to the people who provided the bad information in the first place and used them as the sole test of whether a consumer's complaint was accurate. That is a rubber stamp approach that will no longer take place after today's agreement. It is very important to recognize that the laws, regulations, and industry practices with regard to the credit reporting agencies were simply not good enough. And along with other colleagues, particularly the CFPB, we've been looking at this problem and trying to come up with a more comprehensive solution, and the settlement agreement we are announcing today is the most comprehensive overhaul of credit reporting bureaus and this whole system in well over a decade. We took a very aggressive approach in our investigation. We directly engaged with the three credit reporting agencies on a broad range of issues, and we're very pleased with the fact that the agencies worked with us, and it's an extremely detailed agreement, and they worked hard to come up with what we think are a great set of solutions that will improve credit reporting for all Americans. It is an agreement that first and foremost requires that the agencies do the due diligence when a consumer disputes a report. They cannot just take the word of the data furnisher anymore. They have to do their own independent investigation and assign an employee with the discretion to resolve disputes to conduct an independent review. If the data furnisher is wrong, we're now going to find that out from an independent investigation. The reporting agencies have also agreed to assemble and assign specialized teams with the expertise and discretion to investigate and resolve much more complex consumer problems that require a much higher level of scrutiny, including fraud, identity theft, and mixed files. Mixed files occur when consumers might share a similar name and have some of their social security numbers be a little bit similar. There are millions of people in America who are suffering from the problem of mixed files, where all of a sudden you get on your report that you owe a bunch of utility bills in a home you never lived in. So this is something that they are now agreeing to spend the money to train and implement this sort of SWAT team approach of people with expertise to deal with this particular and troubling area. And as you know, identity theft is a major issue. Identity theft, fraud, and mixed files would be covered by this provision. On the issue of medical debt, this agreement immediately requires that every consumer gets a 180-day waiting period before medical debt will even show up on the report, to give you a chance to work things out with your insurance company. They've also agreed to remove medical debts immediately from all credit reports as soon as the insurance company pays. It will not be treated as a bad debt. Most bad debts, even if you pay them off, stick around on your report for 7 years. That will not be the case in medical debt. Everyone should know that they can go to www.annualcreditreport.com to obtain their free annual credit report with no hidden fees or strings attached. This agreement requires the agencies to provide hyperlinks to this site so that it's easier for people to get the report. A very small portion of people in America actually apply for these reports, and we're working with the reporting agencies to increase that number. And the agreement also provides another free report for people all across the country if they challenge a charge to make sure that the changes were made, and then no charge for that either. So we are engaging with them in a special program in New York to help New Yorkers understand their legal rights to the free credit report and to the new and improved dispute procedure. They're going to join with us, the reporting agencies, and implement an intensive consumer education media campaign that's going to raise people's awareness of what their rights are, how easy it is to get a credit report, and what the new provisions are that enable them to more easily challenge bad reports. So they will be paying for, again, the ratings agencies have agreed to do this, public service announcements, ads on television, print, radio, and online. And finally, any New Yorker, any New York consumer who filed a dispute before these new procedures were put into place, making it easier to get a dispute resolved in your favor, is going to get a second chance. So anyone in New York who filed the dispute, was rejected, and clearly believed that it was a mistake by the data furnisher and the credit reporting agency, you're going to get a second shot at renewing that dispute. So the nation's largest reporting agencies, who play a vital role in determining who has access to credit, in this settlement have accepted, to a degree they haven't in the past, and we have to commend them for that, the responsibility that comes with that role to ensure the fairness of the dispute process and their data. That means investigating and correcting errors on credit reports and doing everything you can do to ensure the accuracy of the data that is on the reports in the first place. And the credit reporting agencies have worked side by side with the great team from my office who's produced this. They've done very good work, and these are major, major reforms to this industry. I look forward to continuing to work with them as is provided for in the settlement agreement. But they really did work with us to accomplish a lot in some very, very technical areas. So not only will today's settlement agreement help protect consumers from unnecessary stress and hardship, it's going to help families all across America send their kids to college, buy homes, buy cars, pay for health care. It's going to help ensure that creditors and employers are getting accurate information. All over America, there are businesses that want to sell something to a consumer who are getting a report saying you can't sell to that consumer when it's not accurate. So there are more customers out there for businesses as a result of these changes. Ladies and gentlemen, this is a tremendous success and a great breakthrough, and we look forward to working to implement it in the months ahead. And let me just say a little bit in Spanish. Oh, and I should point out that the basic outlines of the agreement are set forth here. It is a very complicated settlement agreement, so I'd urge you to look beyond our most excellent and beautiful charts to get the details and then some information about the free credit reports. But un problema en el reporte de crédito puede afectar a todo una familia. Hoy, las agencias acordaron investigar y corregir los problemas. Este acuerdo trae reformas a la industria y protege a los consumidores de los errores. Todos los errores en su crédito ahora no hay muchos problemas. So now I would like to introduce a great colleague in government who works with us on these and many other issues, Julie Menon, a longtime friend who protects the financial security and safety of New Yorkers. She's been working on these issues as a community leader and in many capacities, and now as the Commissioner of Consumer Affairs. Julie.
Thank you so much. I want to, first of all, congratulate the Attorney General on this incredibly important announcement, and I want to thank him for inviting me to be here today. Banks certainly need a mechanism to screen for fraud and other major issues in consumer credit histories, but we as a society need a credit reporting system that is accurate, transparent, and easy to navigate. Unfortunately, the credit reporting system we have in this country is, as the Attorney General mentioned, too impersonal, too impenetrable, and too inaccurate. And when there are mistakes, families are left with damaged credit and no reliable means of redress. Anyone who's worried that a single credit glitch could cost them dearly should join me in thanking the Attorney General for the agreement that he announced today. The Attorney General's accord with Experian, Equifax, and TransUnion is a major step in the right direction. Mayor de Blasio has made fighting income inequality the centerpiece of his administration, and the Department of Consumer Affairs is a key part of that. Our Office of Financial Empowerment is, as the Attorney General mentioned, very important in terms of creating innovative products, helping the unbanked, and we also operate 30 financial empowerment centers around the city where we help people in debt. That is why we offer financial counseling. It is why we offer banking products for those with damaged credit, and it's also why we offer free tax preparation. We know that when people achieve financial stability, it certainly has a ripple effect that improves their entire lives. We also see the debilitating effects that damaged credit can have on families. We did a study at the Department of Consumer Affairs that showed that across the city of New York, there are 825,000 unbanked New Yorkers. All too often, these people are denied bank accounts or have existing accounts that are terminated because of damaged credit. And when hardworking people don't have access to banking, they spend money they can't afford on fringe financial services, fail to save, go into debt, and struggle to maintain healthy credit. In short, they cannot achieve financial stability. So I am here today to support the fantastic work of the Attorney General has done and to also acknowledge the 3 credit bureaus for their cooperation. These reforms will vastly improve the credit reporting process for consumers. And in closing, I just want to say that in this society, good credit is not a privilege. A bank account is not a privilege. They are truly necessities. Thank you.
Thank you very much. A great colleague in the effort to protect consumers. And now I'm very pleased to introduce Susan Shin, Senior Staff Attorney at the New Economy Project. Susan and the NEP have worked very, very hard to educate New Yorkers about their rights when it comes to credit reporting. They're a great advocacy organization. I'm very pleased that she is here with us today. Susan.
Thank you, Attorney General Schneiderman, for this important settlement with the credit reporting agencies and for taking leadership nationally in challenging fundamental inequities in the credit reporting system. These important reforms will help not only hundreds of thousands of New Yorkers, but people across the country. At New Economy Project, we run a financial justice hotline for low-income New Yorkers. And over the years, we've taken thousands of calls from people struggling with debt collection abuses, predatory lending, and other problems with banks. One common link is that all of these financial abuses find their way onto people's credit reports. The credit reporting agencies handle hundreds of millions of credit reports. These credit reports have an outsized importance in people's lives. They magnify the effects of discriminatory financial practices and follow people around for years and years. The problems with credit reports block people from housing and increasingly from jobs as more and more employers are using credit histories to make hiring decisions. Unfortunately, it's people in low-income communities who are living check to check and people in communities of color who are most impacted by problems with credit reports. The dispute resolution process has been a nightmare for so many people for so long because it's been so hard to get any kind of reasonable resolution of their disputes. It's been like banging your head against a brick wall. Just the other day, we talked to a hotline caller who had paid off a car loan, but the debt was still appearing on his credit reports as having been discharged in bankruptcy, despite repeated disputes. And over the years, we've spoken to many other people who have had invalid debt collection judgments vacated or who have been the victim of identity theft but have been unable to dispute these problems off of their credit reports. The changes announced today by Attorney General Schneiderman will help hundreds of thousands of New Yorkers who are dealing with these same problems. The changes today will move this dispute resolution process in a better direction and are an important step in holding the big 3 credit reporting agencies accountable. Thank you.
Thank you very much. And I want to take questions, but I do want to say that this was an extraordinary team effort. This is truly a set of transformational reforms in an industry that has been in trouble for some time. And we look forward to working with the credit reporting agencies as we implement all of the requirements of the settlement agreement. But I am confident this will make the lives of millions and millions of families across New York and across America much, much better. So with that, Matt can take questions.
Start on this topic, identify yourself, and
Chris is Michael Bloomberg. Can you talk a little bit more about the investigation process that led to this in terms of how many complaints you got, how it was initiated, and how long it took to resolve the case?
Well, we had we were hundreds of complaints. I don't know how many complaints we got, but this is something. And it's very important to understand that a lot of consumers don't even really understand what the problem is when they call in a complaint. People don't usually call in and say, I'm having trouble with the credit reporting agency because the data furnisher has committed an error. They don't understand that. But we receive complaints, public interest groups receive complaints, consumer advocacy groups receive complaints, Julie's office receives complaints. We started the investigation, determined pretty quickly that their system for resolving complaints was just fundamentally flawed, and the system for dealing with credit furnishers was a problem. And then, to their credit, it didn't take too long for them to say, let's engage and start to talk about some substantive reforms, and they really worked with us. This is the settlement agreement. It is highly technical. It has metrics. It has enforcement mechanisms. It has agreements for them to go forward and find better ways to weed out bad data furnishers. This is really a fundamental reform.
New York Law Journal. Is the settlement agreement effective immediately?
The effective date is as of when it was signed. When is that?
Yeah, it was signed on Friday, but not all of the terms go into effect immediately. It's from now until 3 years from now. So there are different.
Right. There's a schedule in the settlement agreement for when different provisions get rolled out, but it's effective as of Friday.
Over here.
Well, and that actually raises tangentially a side point. This doesn't preclude anyone from bringing their own lawsuit if they feel they've been harmed. So this is a reform prospectively for everything that's going to be going on that should reduce the number of lawsuits significantly in the future. But they have committed to forming a working group, and working with us, they're going to be developing best practices. But they have, under this agreement, they have requirements that if they are dealing with a data furnisher that's, shall I say, a recidivist data furnisher that keeps providing bad data, or they can see, because they're now going to be tracking, and they're now going to be metrics, so now they're going to have, the credit reporting agencies will have the information, they can take action to correct it, including going all the way up to just saying, we're excluding your data from now on. So they're meeting regularly with our office, they're reporting to our office. We have the power to make sure that all the terms of the agreements of this agreement are being followed through on, and we will do that. There's a 3-year period of monitoring and reporting to our office. And as I said, the Consumer Financial Protection Bureau, which does have regulatory power in this effort, we are working with them, and they're going to take these reforms, which are a huge step forward, as they move forward to implement even further monitoring mechanisms.
Attorney General, I just want to make sure, I'm sorry, Isolda Pereira from Telemundo. This agreement, of course, it takes effect immediately nationwide, and there's some stages that are going to be incorporated within 3 years. Is that what you said?
Correct. It starts, there are some things that go into effect right away. There's a detailed calendar in the settlement agreement for when different provisions are going to be rolled out. Some of this takes time for them to set up technically and to hire the staff. This is not inexpensive. They're going to have to hire a lot of people and train a lot of people to be part of these specialized teams to deal with identity theft and double files and things like that. But it starts right now, and over the course of the months ahead, there is a schedule of when the different provisions are being rolled out, and the agreement itself we're going to be monitoring and seeing that it's fully implemented over the course of the next 3 years.
I just wanted to make that. Yes, if you can, Linda Vaquero, from NBC New York. Can you just walk us through again the differences between the current system now, and you did mention that the information goes to the credit furnisher, and that basically whatever they say is the result. But can you tell us also about this automated process and the codes that people can see on their reports and maybe how that would be different?
Well, that's the scores and other things are all results of what happens after the credit reporting process is completed. So the stages of this are the credit reporting agencies collect information about consumers. So if they're collecting information about me, they would look for data that any of the data furnishers provides them. Now, the data furnishers are the lenders. They're loan companies, they're credit card companies, they're anyone. They provide that information. More than 30,000 data furnishers are providing information to these three credit reporting agencies. The agencies also look at public records to see if there are bankruptcies. They do everything they can do to collect up information on the consumers. The problem has come from the fact that they did not have adequate mechanisms in place to check on an ongoing basis to ensure that that data was accurate. And that's what the credit report consisted of and relied on. And things like the FICO score were calculated by others based on the information in the credit report. So all of the codes and things, the various algorithms that different companies use to determine what to do with the information on the credit report, the basic information all comes from the credit reporting agencies, and their information all came, or almost all came, from the data furnishers. So this agreement transforms the relationship between the reporting agencies and the data furnishers. They're now taking responsibility for and taking proactive steps to ensure the accuracy of that information, to weed out bad information, and if necessary, to deal with bad actors who are data furnishers. If the Acme Loan Company has problems, and 50% of the people who have information from the Acme Loan Company on their credit reports, now there's going to be a system in place for them to deal with and eliminate information from the Acme Loan Company. So this is really the heart of the agreement. But all of the credit scores are later produced results from the collection of this basic information.
Warren Levinson from the Associated Press. This is bound to cost the credit reporting agencies a fair amount of money. How much did they resist?
I don't know that we've gotten into the details of the finances, but it is a substantial undertaking. It's going to cost them a lot of money as this is rolled out. I don't have statistics on exactly what the estimates are of cost because there's some of it is technical, some of it relates to personnel, but it is going to cost a substantial amount.
And when they saw you coming, did they say, "Oh, we're glad you're here to help us fix all the errors in our report"?
That's usually how I'm greeted in fraud investigations. To say obviously, this is a challenge here. Sometimes when I leave a message for a friend of mine who's a lawyer, I get a message back saying, "Good to hear from you, I think." So when we came calling, they weren't excited to see us, but they took it very seriously. And understand, they've got all these civil lawsuits against them. They understood that they had to do something. And to their credit, unlike some industries, they decided pretty quickly that the right way to do this was to try and come up with some reforms because they were going to have nothing but further problems with litigation going forward. And they didn't want their credibility to be undermined because they play a critical role in the American economic system. And I'd say they engaged. They didn't exactly throw a party when we got there, but they pretty quickly took it seriously, and not too long. They really they started to say maybe we can engage in reform efforts that you could say they probably would have had to do it anyway, but given what's going on in Washington, I'm not sure there's going to be any legislation, pro-consumer legislation coming out of Congress for any time soon. So to their credit, they said we're going to resolve this issue with the Attorney General's office in New York, and we're going to make the agreement a national agreement.
Anything else on this topic? Any other topics?
What's the common errors with the credit reports?
I'm sorry, what?
What's common errors, the common complaints like from consumers about it?
Well, I got my credit report, and I've got a bad credit rating because it says, I didn't pay off these different 5 credit cards. And if the information's incorrect, if the information about the credit cards is incorrect and the credit reporting agency didn't check to confirm that, that stays on your credit report. The burden has been entirely on the consumer to work their way through a very, very challenging system, not a user-friendly system, and a system that relied way too much on the people who generated the bad data in the first place, just confirming that their bad data was good.
Willie Adelson with Capital New York. What are your thoughts on the governor's 90-day retention policy, specifically in terms of exposing the state to litigation? Obviously, some of these emails are pertain to current or future lawsuits against the state. Does this have, expose the state to one of the litigation problems?
It's a complicated issue. We're monitoring the reform proposals that are underway, and there are issues related to law enforcement investigations and other things. But that's why you have negotiations and you try and work out something. But I think this is certainly a hot issue right now in this legislative session. We're watching it carefully because we represent the state agencies, as you say, and we want to make sure that they're while we want transparency, we don't want additional exposure, and there are a lot of technical issues involved as well.
Did the governor's office consult with you before making this decision?
I don't. Which decision?
To implement this 90-day
Oh,
policy?
no, that was a policy decision was made a long time ago. I'm not even sure when that was made. No.
One more, Beth?
Much has been made last week about Ferguson and sort of over-ticketing of community of color, and that eventually affects folks' credit scores. So I'm wondering if credit scores are affected by interaction with government. Does this settlement do anything to address that sort of thing?
Well, there actually is a provision, I believe, that they're taking out tickets and fines and things like that completely.
That's right.
So, yes, problem solved.
Thanks, everyone.
Thank you.